Investors are closely watching the news from the United States. Every macro report adjusts the distribution of the probability of the Fed pausing at its next meeting. Meanwhile, markets are currently expecting that the US regulator will refrain from rate increases. However, the upcoming reports may affect currency pairs. So let's take a look at the other publication scheduled for this trading week. The US dollar strengthened against its counterparts except for the Australian dollar. The Aussie rose after the Reserve Bank of Australia unexpectedly increased its key rate by 25 basis points to curb raging inflation. However, the effect of this news is fading, and investors continue to assess the state of the Australian economy. There is no reason to be optimistic. GDP growth is at a very subdued 0.2%. Since Australia is still a commodity export-oriented economy, the news on foreign trade trends is particularly important. Forecasts suggest that the trade balance is likely to narrow slightly, and the data from the Eurozone will be much more dramatic. The final estimates of GDP growth for the first quarter are being prepared for publication. Preliminary estimates showed a slight increase of 0.1%. However, most economists believe that the economy is not growing and the GDP growth is likely to remain at 0% after the release of a final German economic growth data, which recorded a recession. The ECB's high interest rates are putting excessive pressure on economic activity in the region and limiting consumption. Therefore, the euro may lose its investment appeal, and this is a clear signal for the ECB to soften its stance. For this week's final two trading sessions, only unemployment claims are expected to provide any clues to Fed's future policy. In the week ending June 3, 239,000 people are expected to have filed for initial unemployment benefits, still higher than the average, suggesting the labor market remains overheated. And when Fed officials decide how to maintain its policy, an overheated labor market is one of the main reasons for a rate hike. And the report will be the only significant publication from the United States this week. But on Friday, there will be some news that may support the US dollar. For example, the markets will be monitoring China's inflation data. The forecast suggests that consumer prices will increase at a low level of 0.2%. And this shows that the Chinese economy is recovering unevenly from the restrictions that have held it back for several years. Signs of a sluggish growth in the Chinese economy, which is seen as an engine of the global economy, may intensify risk aversion. The greenback may receive growth drivers as a safe haven currency. And the trading week will end with the news from Canada, which will tell us how unemployment has changed in April compared to the rest of the developed world. The Canadian economy remains quite resilient. It's probably the only country where the central bank may continue to refrain from the rate hikes. That said, latest inflation data has brought back speculation that the Bank of Canada may tighten its monetary policy. On a Friday, markets will assess the Canadian labor market, and the expected growth in the number of employed people in 20,000 is actually not much for Canada. However, some believe that the growth rate could be twice as high, which would strengthen expectations of a further rate hikes and revive demand for the Canadian dollar. How we're going to be in the short term in financial markets, we will definitely tell you in our news releases. Subscribe to the channel and follow news with us, and see you online.